afternoon, everybody. I'm Phil Pearlman, and this is Pearl Institute Presents. I'm so pleased today to be joined by EMJ founder, president, and portfolio manager, the one and only Eric Jackson. Eric, how are you today?
I'm great. Good to see you, Phil. Thanks for having me.
Great to have you here. We're going to get right into it in 1 second. Before we do, I just want to give a quick shout out to Stock Market TV, who is our host and production today. The fine people at Stock Market Media and Stock Market TV. Really quick, I want to give them a plug. Open Door has a 10% short interest, but there are many stocks with even more squeeze potential. Download a special free preview of the latest freshly squeezed report from All Star Charts to see which stocks are primed for a short squeeze. The link is on the screen and in the chat and description on YouTube. You can find it right there. Don't miss it. It's great. Okay, Eric Jackson. So it's apropos because let's just get right into it. We're going to talk about you. You have a great story, by the way, and I know you way back. By the way, before this whole thing happened, Eric is old school FinTwit. Been around forever. I was looking the other day. You've been on Twitter for longer than I have, which is crazy. Like March '07. I think I'm like August '07. So you're old school. You're OG. I know you. I think
Just
you're a great guy.
one story about that.
Go ahead.
I first met Josh Brown when Josh was writing a blog on, what was it, StockTwits blog or something like that?
StockTwits blog network.
Yeah.
I pulled him on. I built that blog, by the way. It's hilarious.
This must have been, I don't know, '09, something like this.
08, '09. Yeah.
And so it was like I had just been doing the Yahoo activism, like which started in, I think, in '06 or something like that, where I was like going after Terry Semel. I was like flying out to the Santa Clara shareholders meeting. It was like doing my Gordon Gekko at the mic, shaking my fist and all this. And so Josh, who was like a nobody back then, or just getting started, like he's like, oh, can I do a Zoom? It was like I don't know how he did it. It wasn't Zoom, didn't exist. It was like, can I do a Zoom with you about like activist investing or something? And like he was very polite and all this kind of stuff. I was in my basement of some like smelly little house in Toronto where I was living at the time, and that's how we met. And then like, a couple of years later, as I'm looking up at CNBC and like, this guy's like a shooting star, becoming like the biggest thing on CNBC. So anyway, that's how I first met you. I remember coming to New York and we were at some dinner, and we met, back
That
then.
was years ago, 15 years ago. And so you bring up actually a major theme of this whole conversation sort of as a sidebar, but I just want to get into it because I'm seeing you. First of all, I tweet about you and I get like 1,000 people, haters coming out of everywhere, trolls coming out of everywhere. There's insanity on the internet. And so so I know you're onto something, right? If there's so much hate for you, so like, how are you handling that? Like, it's insane. Like, people were calling you insane 5 minutes before this call started.
Well, it's different. I've had to get used to it. Like I'm Canadian, Phil. So like Canadians are pretty meek and mild. And like I remember taking the Myers-Briggs test like a long time ago and I was an introvert. And now like I gotta like confront Terry Semel. I gotta take down the Open Door CEO. I gotta like, stand in front of Drake's house. It's like not very introvert like. So like getting hate mail, like I just before I came on here, like I was checking my X feed and like some guy was saying, you should be arrested. The SEC needs to throw the book at you. All your, going in front of Drake's house that's a violation of the SEC law. I'm not sure exactly what law that is. But anyway, you just gotta, I guess, tune it out.
You got to tune it out, and you just have to tune it out. As a matter of fact, on the StockTwits blog network in 2011, I wrote a blog post called "Ignore the Trolls." Well, you just got to ignore the haters. But anyway, we're going to come back to that. But I just want to get the major thing about Open Door. So you are intrinsically an activist investor. Like you want to go in, you see a company. There's a big difference. Like, like you have Carl Icahn over here. He's an activist investor. And then you have Hello Kitty over there. And that guy is a meme stock guy, right? And you're
Right.
like, where are you? Like people are accusing you of being a meme stalker, but really you're an activist in your bones. Is that am I getting that right? You're just using new techniques to reach the board, new techniques to reach the CEO who did resign, by the way. Am I getting that right? Are you like, there's an integration going on here? There's an innovation.
Well, 25 years ago, I got a PhD from Columbia Business School in management and strategy. And so what does that mean? Like I was studying like things like the effects of corporate governance on, performance, IPO performance, post-IPO performance, the effect of like management team member backgrounds, like where they study, where they went to college, what function did they rise up through the ranks in and all this, and how that affected firm performance and post-IPO performance. And so this was in like the late 90s dot-com era. And I remember, so I'm studying these like wonky corporate governance subject. And I remember I had to go down to like University of Delaware to interview some academic who's like spent his life studying corporate governance, and he was like saying, "Well, Eric, you probably heard of Carl Icahn. He doesn't own one type of corporate governance, and then there's another friendly kind. There's like friendly activism. There's this guy in San Diego who does that." And I was always fascinated by activism. It was basically like doing private equity on a public company, essentially, right? You buy a 2% position, you lobby for change, and you hope that your position, which might, 2% position might make you the single biggest investor. You hope that that has an outcome. And but like I just like got on with my life. I was like, I didn't want to be an academic, so I became like I worked at a tech company right after like .com, and that was a good company. I met a lot of great people there who I still know to this day in tech. Then I was working with my dad doing like management consulting, and I was living down in Naples, Florida, and I was just like reading the newspaper one day and reading about Yahoo because like this guy named Brad Garlinghouse, who was just a mid-level marketing manager. Now somebody told me he's worth 10 billion because he runs this company called Ripple, which controls XRP and all this kind of stuff. Anyway, he was just like a mid-level manager at Yahoo back then, and he writes this memo called the Peanut Butter Manifesto, which gets leaked to the Wall Street Journal, and where he says, Terry Semel, we're too disorganized. We're like the peanut butter's falling off the end of the toast here. We got to focus. And so, I was like, hey, what if I used YouTube and wikis and blogs and Facebook groups and all this to like start an activist campaign? And, like there got to be like retail investors like me that are also frustrated. What if we pooled all our shares together, we could have a voice. And I recorded like some YouTube video like on a Sunday morning before my wife woke up, so I wouldn't be embarrassed in front of her. And I put it out there, and like by Thursday, like the New York Times had written an article about me, and this sort of like took on a life of its own. So it was, when you say like, are you an activist in your bones? I mean, I don't know, like it was sort of like just sort of happened. And with Yahoo, like they were a terrible board, and I was involved with them for like 10 years, and constantly hammering them, and nothing changed. They just would like write me off as this like weirdo, guy, didn't have a long-term view. That was the thing they always used to say about me. And meanwhile, like all these, Carl Icahn came in after me. Dan Loeb came in after me. Dan Loeb picks Marissa Mayer, drives the company into the ground. Like, so all this smart money, like these Wall Street titans and all this kind of stuff, it's a bunch of BS. Most of the time, these guys know less about tech than most of you and me, combined, Phil. And so it was just sort of like, came out of necessity. But then I got, through that whole process, I met somebody who turned out to be a billionaire, who said, you got some interesting ideas, Jackson. How about I give you some money to manage? He said, but just, can you cool it on the activism? I don't want to, because what if you do something and you go after some company and they found out that I, Mr. Billionaire, gave you the money, and then they write a story about that because Eric said Marissa's terrible, and that must mean that I think Marissa's terrible, and it's kind of embarrassing. I don't need that in my life. And I said, well, yeah, Mr. Billionaire, if you want to
You got the money.
manage it, I'll do it. I'll zip up my mouth, whatever. So like I put it on the back burner, and it wasn't until like the billionaire pulled his money out a few years ago, and then I was kind of like scrounging around, trying to make figure out.
So he pulled out the money. He pulled out the money we had a bear. What was it? Like 22 was a bear market, and then he was like, so you
Mhm.
had a tough year, and he was like, adios. Is that what happened?
I had a tough 2 years. 21 and 22 were like terrible years. I did worse than Kathy Wood, I think, in those 2 years, and she did pretty bad, and she got like beat up and all this. I had done like amazing, up until that, kind of similar to her. I didn't even know who she was actually until like 20 or 21. But I was like focused on these like small little growth techie stocks. I was not doing activism. I was like investing Roku, Carvana. Twilio was a big one. I got into Twilio at 18. The thing went up to like 400 and something eventually and stuff. But then
So
I
you like to
shellacked
come
in
in, okay?
21.
So I want to get here, okay? But so I'm just going to go there. So you come in, you have the chops, Columbia PhD. You have the chops to be able to look at a company and see companies that are damaged, companies that have problems, and you're able to see the potential in the company, what maybe can be done. You have a really sharp eye for the psychology of the executive, as you were talking about before. And that is super interesting. That's a whole other hour, by the way. We're not even going to get that deep into that. And you come in here and you see this company Open Door. It's an online real estate, whatever, and you see that it's being driven into the ground. It's not being run right. And now, at this moment, explain to me, because honestly, I mean, I've been around the markets forever, obviously, but I don't fully understand what is in your mind the activist case, the bull case for reorganizing, rejiggering Open Door to make it a super successful company that can go to 82 a share. What's that case? What's that fun? Like, what would you do tomorrow? Like they come in and they say, hey, okay, write us the playbook, write us the blueprint. What should we do? What's the thing they should do to get from now or trading at 82 cents a month ago to trading at $82? What's the playbook there?
All right, sorry about that, Phil. I'm back.
That's okay. We still got you. Go Tay. We still got him. Okay, give him 1 second. I threw him for a loop there with that judo question. Okay, we got a new look. We got the Toronto background. Oh, there you go.
Get rid of it.
Okay. While we're waiting, what's the deal with the Dodgers hat, dude? Are you're not a Blue Jays fan? What's up?
Well, I love the Blue Jays, and they're really good this year. But I like the Lakers more. I just thought this was a cool hat because
it's a great hat, by the way. We're going to be up in Toronto in a couple of weeks. We'll hit you when we get up there. But okay, so here's the thing. What's the playbook for really the recovery, the rejuvenation of Open Door? What is the playbook? How do you see it?
Okay. Well, one thing we didn't mention is that I found Carvana in like May of 23 when it had gone from 400 to $3.50 in December 22. And it was sort of on its way up. And I was like working with the team to kind of build some AI models to flag interesting companies. And my first iteration of my first model flagged Carvana at $11 in May of 23. And then I ended up getting into it a week later. I ended up going on CNBC a couple of weeks after that. I sort of like pounding the table for it with Scott Wapner. And he was like, come on, Carvana, who wants to go circling the drain and all this kind of stuff. Anyway, and so nobody really cared. Like everybody just thought it was a stupid idea and like super risky, would never come back. And, and a couple of weeks ago, it got to 413. So it like got back and then some. So, and it's like never been done before. 400 to 350 to 413. Like it's unreal. And so
how long did you hold that? How much were you able to endure that position?
So I can't remember exactly. I got in at 15. It was at least a 10 bagger, and then around like 150. Like I remember when I worked for the billionaire, my boss was his CIO in his family office, right? The Swedish guy, real stern guy, and he always used to say, Eric, the problem with you is you never take a profit. You write it up and you write it down. And so like I'm like his voice, like even though he, essentially I was fired, right? Like I didn't have to do, didn't have the Swedish guy in my life anymore. Like it was like etched in my memory. And so I'm sitting on this 10x gain, and I was thinking to myself, you know what? I think that this is a really good company. It's sort of the opposite of Open Door. Super CEO. He bought $70 million worth of his own stock on the way down, and a great team, super team. Like the chief product officer, followed me on Twitter. So I reached out to him. We had a phone call in December, January, 22, 23. And this chief product officer bought $3 million worth of stock in Carvana in Thanksgiving 2022 at $7.50 a share. Now, Phil, I go back to my Columbia days. We used to have to go down to the World Trade Center to the SEC library, I'd pay these Columbia College kids to photocopy filings from the SEC and code them and go through them. And I was like, who bought stock and all this kind of stuff. And nobody buys stock. No insiders ever buy stock. It's 95% of the time, they're just selling. And certainly whenever there's somebody buying, it's only the CEO. It's never the chief product officer, let alone spending $3 million of his own after-tax money. That would be a discussion with my wife. That would be pretty tricky, around the Thanksgiving table in 2022, when it's gone from 400 to 750. And I'd say, honey, we got to double down here. We got to put $3 million of our own money into this stock. And she'd pull her hair out. But anyway, I knew this company was going to go well. I knew it was going to go. I did believe in my heart that it was going to go to 400. But then I hear the Swedish guy, right? And so I said, I'm so smart. I'm the guy who discovered Carvana. Now everybody's going to know I'm the Carvana guy. But I'm so smart. This damn thing is really volatile. I think between 15 and 150, there were three different 50 to 60% pullbacks on the way. And that's just the way it goes with all these 100x names. And you got to just you get the Pepto Bismol and sign up for that. And so, but I'm thinking to myself, when I sell it all, or most of it at 150, I'll sell, I'll buy it back at 130, then I'll sell it at 180, then I'll buy it back at 170, and then I'll sell it at 230. I'll be so smart because I'm the smart guy. And I never did this because I'd be too embarrassed to do this. But I'm sure if you added up all my trades from 150 to 413, I've lost money trading Carvana in and out because you just, you don't pay attention as much, and it just sort of you just lose it.
So you have the 10 bagger, and then you give some of it back, trading it from 150 to 400 instead of just staying long or just cutting your position by a third or by a half and letting the rest fly. Okay, so fast forward to today, you're seeing some of the same potentials with Open Door. So what's the playbook for Open Door? What do they have to do right now? They bring you into the board meeting and they say, Eric, talk to us. Tell us what your plan is and what's your plan.
Well, Uber redefined taking a taxi. Airbnb redefined doing B&Bs. Carvana redefined the experience of buying and selling a used car. We don't have to deal with those, going to the car dealership and haggling and all this kind of stuff. Just deal direct. So Open Door was supposed to be this reinvention of buying and selling your home. Take the agents out of the picture. Cut out 6% agent commission fees and all this. Deal direct with a trusted brand that hopefully can go global. That was the plan with Open Door. And the problem was they got into they sort of ended up buying the houses themselves, putting them on their balance sheet, paying too much in 20 and 21, and then getting stuck holding the bag when the prices of the houses dropped. And so a bunch of but. They're a lot smaller today, most mortgage companies or whatever. The housing market's kind of frozen. They've had to cut costs. They had a bunch of founders leave, including a guy named Keith Roboy, who wrote the original business plan. But the new team and the new management team is not really founder material. They don't sweat the details. The CEO who just quit. This Canadian woman, she came with this financial, pedigree, Goldman Sachs, TPG. She was the CFO. They elevated her to CEO, and she never bought a share. Unlike the Carvana folks, never bought nobody in this company ever bought a share, even though the stock would hit a high of $39. Chamath took it public, got down to on June 25th it was 51 cents a share. This woman Carrie was selling shares at 56 cents a share, and the board obviously was signing off on it. Now, I just think that's nuts. Like that you're like, it just shows no leadership, no vision. And so the company was sort of in this, like it was a $371 million market cap company at 51 cents. And in a global, in the US residential real estate market is a $20 trillion TAM. And so, they had missed the boat. They were trying to morph into like being friendly with agents and all this. Anyway, my vision is that how do you become the Uber of global, from a $371 million market cap company to a global Uber where you're the trusted brand. They don't own the cars, they don't own the drivers, but everybody comes to them. The riders come to them, the drivers come to them, and they take their cut on that interface level. And the way that Uber did it, the playbook was you dominate in the US first. You got to fight like hell against all the local city regulations who are saying you can't do this, you can't come in here. We're going to protect the incumbents, the taxi drivers, and all this. They did that. Travis Kalanick did that for 6-7 years, and then they went global, and they dominated global. They're like one of the only American brands that got a foothold in China, which is phenomenal for a company like Uber. Anyway. That is exactly what Opendoor should do. They need to cut their costs. They have 1,407 people working at this company. I do not know what they are doing. For like a $371 million. All these companies, they start out as billion-dollar companies. They hire all these people. They're walking around. Their corporate headquarters are supposed to be in Tempe, Arizona. But the cool people only like to live in San Francisco, not Tempe. So effectively, the real head office is in San Francisco, even though on that letterhead it says that it's in Tempe, Arizona. Anyway, there's so many things that went wrong. The founder mentality went out the door. Nobody was minding the store, and they need to get that old CEO out. She quit, thank goodness, because we started this community that put a lot of pressure on her.
I want to come back to the fundamental case there, because I'm going to come back to what you're saying. It's very interesting. The Uber of real estate, basically. So you become a software company, and there was some of that vision initially with the company. It just was not executed well. And I think, and when did Raboy leave the company, by the way? Because that guy, he's a difficult guy, but he's a brilliant guy at the same time. And he's a real deal guy, even though he's not loved out there. He's just a difficult guy, but he's also incredible at what he does. And so when did he leave, and what was the failure? They just talked the talk, but they didn't walk the walk in terms of making themselves because you have to have great software if you're going to be a software company. And if you're going to be the Uber of real estate, you have to be a great software company.
Well, yeah, they should be an AI first company. Or what does that mean? Some people say, oh, it's just AI. That's not much of a strategy, Eric. Keith Raboy, he still follows this company. It's his baby, right? He left, I think it was 21 or 22. At the end of 22, that's when kind of things came to a head. And the founder CEO, Eric Wu, left, because they had all these houses on their balance sheet that were kind of priced too high, and they had to take a big loss and write down all this kind of stuff. So I think Keith left around the same time that Eric did. But he has tweeted, he's followed the company. He's been very critical of the company. He never liked Carrie. He was always saying you shouldn't hire a CFO to be a CEO. It's just functionally impossible for these people, especially in a tech company. You don't have any tech background, you don't have any product background, and they should be an AI first company. He's tweeted he thinks they should be they should have 10% of the number of employees they have. And they should be a 140 person company. They're currently a 1,407 person company. And he believes, he has tweeted this, that he thinks that all that can be done by AI, that 90% of headcount. And I'm hearing this more and more from other companies, by the way. I think this is super exciting about AI, just as a sidebar. But, so you could do this company with a lot less. You can do a lot less of the iBuying, which was their kind of Achilles heel in version 1 of this company. And you can get Keith back. Keith can't be the CEO. He's, but he can be on the board. I think Eric would be a good board member to bring him back, even though obviously he made mistakes in version 1 too. But they need a killer CEO. My dream CEO would be Travis Kalanick. I don't know if he is available because he started this cloud kitchens and stuff, and to me, like being the Uber of real estate globally is a much more exciting proposition. And I when I first like built my thesis for Open Door, my dream of dreams, Phil, was that like all these things have to go right. Like nothing, like Carvana didn't go from $3 to $400 overnight. Like all these forks in the road come along, and everything has to kind of go break your way. But in like the ultimate blue sky scenario, it's that Keith Raboy would come back to join this company, and he would breathe new life into it, and he would pick the next CEO who would be this killer CEO. And I felt like it was likely, more than possible, likely, because if he saw that there was like some real momentum behind it, and that which I hoped my advocacy would engender. And the reason is like, obviously he's very rich, he's very successful, he's made it, his husband's in the Trump administration, all this kind of stuff, whatever, like all that's good. The thing that any of these rich guys, they can't get enough of, the redemption arc. There's just nothing like it. Nothing beats coming back, riding on the steed back into the company you founded and taking it to $500 a share or whatever. I mean, that's my ultimate like blue sky target. And that's just irresistible. I mean, I was trying to get Travis interested. I was saying, hey, Travis, you were thrown out by the Uber board, which was, I think, a stupid move. I forget, there was some Me Too.
I remember that whole thing. It was like his personal life is. I mean, it's a lot of noise when those kinds of things.
Do you
happen.
remember the candidates that they considered?
He was a genius too. Like he is the guy who created the Uber of Uber and the Uber of everything else.
If he had stayed there, they would be so much more successful than they are today. I mean, I think Dara's fine that they picked. I mean, he's a lot better than Meg Whitman and Jeff Immelt, who were the other two candidates up for that job, which would have been like friggin' disasters. But they're a $200 billion market cap company today. I bet you they would have been 400 or 500 billion easily had Travis stayed along. So, Bill Gurley was the guy that pushed Travis out, essentially. Like he led the coup inside the board to get him out. So my hope was like, hey, Travis, you got to come back to Open. Why? Because this is the way to show up the Uber board. You got to show them that they were jerks. You got to show the world they were wrong 10 years ago, whenever it was. And the only way to do that is you got to build this thing up to have a bigger market cap than Uber. And so, I think that's possible, but again, like, I don't know, I have no inside info. I know people that know Travis, and I've like given them my tweets to pass along to him, but I have no idea whether he's going to take the job or not. He should.
And so do they still have a lot of real estate on their books?
No, not now. So like now the name of the game for them, I mean, they're still an iBuying shop, but like it's all focused on spreads. Like how can they make sure that they're not taking on too much risk in terms of what they offer, and they use all this machine learning in terms of when they make an offer. Like, say you and I got a $400,000 house we want to sell, and they're going to come in at 375, and then, you'll say, well, do I want to accept 375 even though I think it's worth 400? They say they're going to close in 45 days. Man, I got some bills to pay, so maybe I better take that, bird in the hand kind of thing. And so, and then, but when they make that 375 offer, they know for sure they can flip that thing within days to another buyer for whatever, 385, 395 or whatever it is. They kind of build that into their. So that's the name of the game, and keep these things on their balance sheet as little time as possible. But they should be trying as much as, I think they'll always have to do a little bit of iBuying. But they should try to emulate Airbnb and Uber as much as they can. The reason why they still have to do the iBuying is that essentially, I think they operate in something like 30 different cities today in America. I mean, they say they're national, but it's really like city by city where they operate. And every city's different, and every real estate market's different. And the thing is, if you're going to like match buyers and sellers, there's always got to be an underlying bid somewhere. Somebody's got to make that first offer. And so, the world has changed. There's a lot more people out there, private credit, blue owls of the world, and all this kind of stuff out there to kind of bid for these things. But, sometimes it's going to have to be Open Door that steps up to the plate and says, okay, I'll make that first 375 bid on your house, Mr. Pearlman. And then, they hope that then the next guy comes in and, we'll pay 385 because we know we can really sell it for 395 or whatever. And then somebody comes in for 390. But they should be this sort of middleman using AI, matching the sellers, matching the buyers. That's the other thing that's really important to point out here about this business, Phil. And the reason why, what everybody missed, including this board that was asleep at the switch, in kind of running this company to the ground. And by the way, I've talked with some of these board members, and they tell me the same shtick that I heard from Yahoo from all those years. We have a plan. Oh, we have a long-term plan. We know what we're doing. You're criticizing us, Eric. But, and I'm like, really? Part of your plan was driving this thing down to 51 cents and almost getting delisted from NASDAQ. That was part of the long-term plan. You wanted to take it subterranean, and then bring it back, 2 years later after you do your 50-to-1 reverse stock split and all this kind of stuff. Perfect. Great plan. It's BS. It's garbage. They always lean on this. You don't have the long-term view, Eric, and all this. Forget it. The one thing I learned from that whole Yahoo 10 years misery of my life was this time I'm going to lock hips with Keith Ramoy, and they will not be able to say that this guy Jackson is some crazy guy, because Keith will be saying exactly the same things. And I'll say, oh, really? Am I just a complete idiot from Canada standing in front of Drake's house? Why is Keith Ramoy, the founder of this company, saying the same damn things?
Have you talked with Keith?
It's funny. We don't. I tried to, but he is a funny cat, and we've never spoken. He's followed me on Twitter for like a long time. The only way I communicate with Keith is either Twitter DM or email, and I'll send him like I'm like a wordy guy, as you can tell from this interview. So I'll send him like a paragraph, and I'll like 3-part question, this, and this. I only ever get one-line answers from Keith, and sometimes Keith, I think he's the most brilliant guy in tech. That's just a personal opinion. And he's not always 100% right. Nobody is. But he thinks on different levels. So sometimes I'll get back these one-line answers on email or whatever. And I'll be like, what the hell is he saying? And I literally will have to cut and paste it and put it in ChatGPT. And then have ChatGPT like explain to me what Keith's trying to say. Well, he's sort of commenting on this, but he's really talking on this.
So he's cryptic. So he's there and he sees what's going on. And so, there's I don't want to get too far philosophical here, but there's a whole model of serious people doing seemingly ridiculous things. And that is a really important, like, when we're in a ridiculous situation, when the world is insane, you see serious people doing things that seem ridiculous, but in reality, they are completely sane, and there's a justification. And I have no position. I know you're long. I have no position in this. I don't really have a plan. I have, I'm old school. I got ETFs. I'm doing great. I'm fine. I'm just, I'm like Nick says, you just keep buying. And I got a whole, I got my whole portfolio. And, but so I got no horse in this race. But what I love here is you coming on here and you telling me what you think, you telling me what's going on with all of these players, and you putting your name, putting your cojones where your name is. I fucking love it, dude. So much respect to you. And all the haters out there, right here, baby. That's what I'm saying. I'm just going there. This is vibe. This is instinct for me. We know each other a long time, but we don't know each other that well. We've met a couple times. We talked a few times, but we know each other from Twitter going back 15, 20 years. But when I see serious people, and when I ask you these questions and you have answers and you have thought all of this out, you are not a Hello Kitty guy, a roaring kitty guy. Sorry, I say Hello Kitty. I just, I'm ridiculous. You're not a roaring kitty guy. Roaring kitty is, and listen, there's nothing wrong with a short squeeze, right? If you're a trader, if you're an active market participant, there's nothing wrong with getting involved with a situation where there is a catalyst. I'm looking at the small caps right now. The small caps been underperforming since my bar mitzvah, and all of a sudden they're starting to go, and there's a lot of short covering, blah, blah, blah. By the way, I'm going to give that plug for the short squeeze one more time right here. If you want to see stocks with the best short squeeze potential, you need to check out the freshly squeezed report from All Star Charts. And the guys have put the latest report together free on allstarcharts.com. You go there, allstarcharts.com. You can't miss it. Click the link on the screen or in the description to download the report and see the stocks with the juiciest, squeeziest setups. I love that copy. Spencer Israel, that's your copy right there. I could tell. with the juiciest, squeeziest setups. I love that. Thank you. And thank you for having us again. Okay, so I want to come back. So you're doing crazy things, but they're not crazy because, I mean, this is my take. This is my honest take. You are an activist investor wearing the meme stock, the Hello Kitty clothing, because you don't have $20 billion to go buy your way, or $5 billion to go buy a large enough position to buy your way onto the board of directors. You're a little guy, not a retail guy, but you sort of have that spirit. You have to use, the web 2.0, the read, write web. Remember they used to call it that. To get out there and put your cojones out there and stake a claim. I love that you're doing that. I'll say that forever. I mean, by the way, for the audience, there is risk. Okay? So, and you know what? Let me just ask you about that. There is risk. This is not a slam dunk. You are putting your money where your mouth is, your money where your name is, but you know for a fact, too, that there is a possibility that you get this CEO that you didn't like, that was underperforming, who was selling stock in under $1. She leaves the company, great. But there's no guarantee that the next guy that comes in is gonna he could come in, he could get it. He could say, hey, I'm a technologist. I know how to do the AI. We're going to get really, really smart about the limited number of markets that we're in. We're going to use AI to, sort of like a market maker for you market people out there. That's what it sounds like to me. The market makers are the smartest people trading a stock, right? They know supply and demand from the inside out, not the outside in. So you really get the smart, you get the computers doing it. I get it. It's a great theory. I love the fact that you're giving me the model. I'm asking you the hard questions and you're giving me the vision. However, there is risk. There's risk in markets all the time. And there's risk in this situation because it is a distress situation. It is a turnaround play.
Well, this board could say, we got this. We know best. I mean, I've already dealt with some of these directors, and you get the velvet rope vibe. Like, you're not part of our club. You're not part of the tech, Silicon Valley elite. Woo, you're just some crazy dude up in Canada and stuff. And so they could say, we know best, and they pick some rando CEO who, like Marissa Mayer, just drives the company into the ground. So absolutely, it could be, a disastrous financial outcome. Now, I think it's, so it's possible. I mean, with a guy like Keith around, it's less likely. It's much less likely. So that gives me some comfort. I mean, I wasn't expecting to make this like a big, activist campaign. I mean, I didn't go into this thinking that. It's just sort of like after the first earnings call, listening to Carrie, it was just like, oh my God. Like, I told Adam Bain, the guy who used to run sales for Twitter, ahead of time, like a week before, I'm like, Adam, please, you don't understand. This is the biggest retail movement since Palantir, and now I think we've surpassed Palantir. And I said, they want to hear from you. Don't make it an audio only earnings call. Make it video like Karp does at Palantir. Take questions from retail, as many questions from retail as you take from all the sell side analysts, just like Alex Karp does. Great idea. Great. Yeah. Okay. I'll pass it along. So either he never passed it along, or Carrie said, no way, I got this. It was 30 minutes, start to finish, including all the preamble for 5 minutes, all the legal boilerplate they read. And it was get in, get out in the cover of night, audio only. I'm out of here. And I think she mentioned AI twice, just in passing. It wasn't like hey, we have a grand AI strategy. It's like, AI is important. Woo. No. So anyway, like that, we could have a return to idiocy with like a bad CEO pick. So yes, there is definitely a risk here.
I really appreciate you saying that. I love what you're doing. Oh, I have another question for you. Do you have any idea how, so we talked about all the haters, right? All these people coming out of the woodwork. Some of them are probably short the stock. There's over 10% short interest in the stock. Some of them are just internet crazy people who are haters. They hate everything. Their lives are horrible. And so they just want to rain on everybody else's parade. Some people are probably just very rigid people that see you doing seemingly a sane person doing seemingly crazy things when the world is crazy is not crazy. That's what I was saying before. They see that and they just want to criticize. But on the other side of that, you're also like, and this is where sort of the meme economy thing comes in and the Hello Kitty thing comes in. You're also sort of developing this army, right? This retail army who hears what you're saying, who's cutting through a lot of the bullshit, and who is like, hey, we get this guy. We get what he's doing here. Here's a company where there's risk, but there's a lot of potential. And if there's a turnaround here, plus we'd like the cut of your jib because you are no bullshit. You come on here, you tell it like it is, you say it, and you're willing to appear ridiculous to prove your point. We're going to talk, if we have time, we're going to talk about that a little bit too. And so you also have this army developing, this retail army. Is there any way for you to guesstimate with any accuracy whatsoever how large of a position the Jacksonians have? Like how big is your army in terms of the percentage of the company? Is there any way? Is it so small, or could it be a thing where, you know, like in the old days, you would say Ackman or an Icon would come out and be like, hey, you know, we have a 5.01% position in this company. Wow. And it means something. Is there, you know where I'm going here?
Yeah. Well, like 20 years ago with Yahoo, like I mean, I did it on an Excel sheet, and I would like, you know, like, tell me how many shares you got. And like Marge from Montana, 200 shares. And I'd like write it down and stuff. And like, I was like,
Marge from Montana.
Yeah. And like, I had a spreadsheet of like, I don't know, 80 names and stuff. And then then out of the blue, like this guy, Tim Kugel, who was the first CEO of Yahoo. He said,
that was a character, dude. Your name dropping today has been stellar, by the way.
So
Bain, Kugel, all of it.
He's still around, so I hope he doesn't mind me sharing the story. But like he said, Eric, Terry Semel was like my replacement. So like, don't use my name. Don't tell anybody I've ever I contacted you. But you know, I got so many shares left, and it was like, I don't know, forget how many, but we ended up with like 0.8% of Yahoo shares outstanding. And it was probably 0.75% were Tim's shares that he lent to the cause. And he says, I like what you're saying. You're right on the mark, but just don't use my name, please. And all this kind of stuff. So we could do that now. I've seen people talk about that on X and like doing that. We've got like a WhatsApp group. There's like a Twitter community group. I mean, there's a WeChat group of like mostly folks in China. There's like a couple of Discord groups and stuff. And people have said, oh, we should like count up all the shares. But I've just been too busy. I haven't done it myself. So I am not sure. But like it's getting to the point now in terms of the number of countries that are involved, where it's like it's more the case of like who's from a country that's not part of the open community versus who is, like, which just like blows my mind.
Fantastic. And there really will only be one way to find out, and that will be with some type of vote taking place, unless the changes happen organically, which I hope they do. Go ahead.
I want to sort of speak to one thing that you brought it before, and it's like you let it fly, Eric, and stuff. Like, well, like when that billionaire took his money out, like things were dark. Phil, I want to tell you, like in my personal life, as a dad, as a husband, it was like you always have these contingency plans. And for the first time, like I could start to see the bankruptcy, possibility creeping closer and closer. Okay. I had like these like fund directors telling me I needed to close my fund. I had like lawyers telling me this, like, I don't know, finance, consultants, compliance people and stuff suggesting this. And I had to go and like talk about it with my wife, and like it was very super embarrassing, super humiliating. As a dad, as a husband, it was tough. And I just want to say, there was one point in the spring I was talking to the guy who originally I met at a gymboree in Naples, Florida, when I was doing the Yahoo thing, and he was 51 at the time, but he was retired because he'd been like a COO of like this Atticus Capital in New York. His brother started and like made all this money. Super nice guy, Peter Barakat, and he says I was talking to him in the spring, and I was like, man, I'm like at the end of my rope. Like my performance these last few years since the billionaire pulled out has been like way up and down. And how am I going to raise money with this? And he said, and he's like, well, maybe this is not for you, Eric. Maybe I'll be talking to you in a couple of years. You'll be like running a mechanic, a garage up in like Northern Ontario somewhere. And he said, but you know what you got to do? You got to start listening to David Goggins. And I was like, what? It's like, yeah, you ever see this guy on TikTok? And he's like, he just doesn't give a shit. So I'm like, look him up. And like, so I started listening to these videos. And I was like, yeah, it's kind of like Kobe Mamba mentality stuff, like take responsibility for your own shit, pull yourself up by your own bootstraps kind of thing. And like, don't blame anybody else but yourself. And, if you're sleeping in, that's just because you're lazy, all this kind of stuff. And I thought to myself, gosh, here I'm like pretending I'm cosplaying a hedge fund manager these last 3 years. And like CNBC is nice enough to call me to come on. And I'm pretending like I'm this like $1 billion guy and talking about NVIDIA and Tesla. And really, I'm just like thinking like I'm going to lose my house and I'm going to lose my wife and my kids and all this kind of stuff, my dogs. And so there came a point where I was like, I just don't give a shit anymore. And, and when this whole open door thing started, I didn't know it was going to lead into any of this. Bloomberg comes and like, they want to, write a story. And I figured like, do I keep up the facade? And do I just like pretend like I'm like this super successful guy, or do I just like let it rip, and open the kimono? And so that's what I did. I kind of shared all this sort of stuff that I'm talking about with you with them. And it was the first time. And they wrote kind of an embarrassing headline, like tiny Toronto hedge fund manager leads the next GameStop revolution or whatever that they said. But like from the moment that came out, it was like a huge weight off my chest, which I didn't even know had been there for 3 years or whatever it had been, or probably longer, like 20 years. And, it just led to such a change in me professionally, personally, like interpersonally in my marriage and stuff like this. I think for the better. I don't know, if my wife would agree, but like it's, anyway, it was just like, you just like open the kimono. Hey, this is me. Fuck it. If you don't like it, if you get scared by all this shit that I went through and all the failures I made and the choppy performance, that's great. Like I had a friend of mine say, you just tell those investors, this is like SpaceX, man. Like we blew up a few rockets to get here, okay? But right now we're on Gen 4 rocket, okay? And we plan on not blowing up any more rockets from here on out. And you can either get with the program and you can like that and you can appreciate that there was a lot of learning before you showed up, or just move on down the line, man. And so I just think it's all helped. It's that sort of spirit that's come into the open door thing. People like it. They seem to. Anyway, 80%, 20%, like you say, hate it and all this kind of stuff. But, anyway, it feels a lot better being me than cosplaying a hedge fund manager.
Dropping David Goggins on us here. I love it. Man, so much respect for you because you're just putting it out there and you're not going anywhere and you're in this to win this. And that's just like, that's what life is all about. We're all only here for a limited amount of time. I'm going to get philosophical for a second here. But listen, we're all only here, all of us, for a limited amount of time. And we only have one life to live. And there are, an endless number of people living lives of quiet desperation who are just not going for it. They would love to do something. They would love to break out. They would love to, buy that boat and sail around the world. They would love to whatever. And right now, what I see is a guy who does have an activist bent and who is just really just going for it. Like I said in the note the other day, no holds barred. Like this is a no holds barred situation. You're going for it. You're going to stand outside of Drake's house. I don't fully understand that. I'm a Kendrick guy. By the way, I took my kids to see I'm squabbling up here with you a little bit. I'm pulling the Kendrick, but I'm going to tell you this. I'm going to be up in Toronto in a couple weeks on the 14th to the 17th. Me and JC will be up there with that whole squad with the whole All-Star Chart squad. We'll be up in Toronto. We're going to come look for you with a camera in front of Drake's house, and we're going to see where you are there. And I'm going to check in with you periodically because, from what you're telling me, you're an investor, not a meme guy. You're using some of the meme tactics, and you're in it to win it. You're in this. You're not going anywhere. It's going to be a battle. You're going to have these crazy swings. Any stock that is going to be a 10 bagger or a 20 or a 50 bagger is going to have massive drawdowns. Amazon went from 114 to 6 before. I mean, I don't even know where it's trading now, but it's it's 1,000 bagger since then or whatever. It's gone crazy and split since then. But it went from 99 to 2000. It went from 114 to 6 before having this meteoric run that made Bezos one of the richest people in the world. Love this. You got people coming in behind you. We're going to wrap it up. You have any last words? If it would have been that little kid coming in, remember that? Where the guy, remember that meme? It was a classic meme. You have the last word, Eric. I love this interview. Thank you so much for joining us today on Stock Market TV. You have the last word. What's up?
Well, I'm sitting here. I haven't showered yet today, Phil. I mean, that's kind of most days, and I put that out there, and people seem to like it. It's sort of like this guy's he's busting his ass trying to unlock value in Open Door, and that's the case. I got the dogs here with me. It's sometimes it gets smelly in here. The Drake stuff is just my son came up with the idea. He said, Dad, you didn't keep talking at the dinner table about what a great opportunity this is, but why does, a lot of people don't watch CNBC. They don't, how do you get them more engaged? And so he lives around the corner. I love Drake. I love his music. Not as much of a Kendrick fan, sorry, but there's something about loyalty, that today is the 27th anniversary for me and my wife. Something about us kind of sticking with people through thick and thin means a lot to me. And, so that's what I'm doing with these open shareholders too.
Happy anniversary, bro. Could be God's plan here. Could be God's plan.
You got it, man. I appreciate you giving me the chance to talk about this with you.
Dude, Eric, it was great having you on. It was great seeing you. And, the best of fortune with this. 82, baby.
82. Ride or die.
Ride or die. Adios. We'll catch you next time. Stock Market TV. I think we're going to do this. We're going to do Pearlman Presents. We're going to do this program with Stock Market TV. I think it's going to happen. This was a great way to launch that program. And again, Eric, thank you so much for being here. Everybody, have a great afternoon. Have a great holiday. Adios.